My out. So my airport is connected. Good afternoon, everyone. Good evening, good day, depending on the location you are joining us from. Welcome to the April edition of the Agrifunding Workshop Series. I uh, those who have joined us for previous session would agree with me that this has been quite an insightful series we've been having since we started. And today we'll be looking at attracting venture capital, what investors are looking for in African agripreneurs. So if you are looking to attract venture capital investment in your agribusiness, you are in the right place. So ensure you have your notes, your pen, notepad, literally anything you need to take the nuggets, the gold mine, the insight from today's session that you could use to replicate in your business. But before we start, I would like to take you through the rundown of the agenda for today's event. Um, Again, before the agenda, do note that we have French language translation. So once you log into the Zoom meeting, if you're using the Zoom app or your laptop, just click on, you would see the translation button on by the default by your right. That's if you're using a laptop. Select your preferred language. For now, we have the English and French. So if you're going to the French room, so as to be able to only hear the French speaker, just join the French room and mute audio so you wouldn't get into the audio at the same time. Our agenda, we're going to have a quick introduction, a quick poll, taking you through what AFT is about. We understand that a couple of persons are joining us for the first time, and we'll be having a membership drive where we welcome you and encourage you to join our amazing community. We'll have a facilitator coming to take us um through the topic of today. Take notes. This facilitator is filled with a lot of knowledge and understanding and expertise. Everything you can name it as it pertains to this topic, we now go to. And we also have an opportunity to the Q&A session, so you can take note of your questions during the session, and you would ask after the training session, or you can drop it in the chat box so as for you to not forget your question. And definitely, most favorite part of every session we have here at AFC is the virtual group photograph, and would introduce you to the next edition of the agri-food webinar, and then with agri-food funding series, and we'll be calling it a day. So this is time for networking, and you know that networking is key for every business. So I would love you to go to the chat box, introduce your name, your business name, what products do you have, or do you offer services, and your location. You can take it down to even stating your state or your province. That would help a lot of persons to be able to know that this is a specific location you are. And on that note, I would love to introduce myself. My name is Idegitu Anna Mambula, and I serve as a communications officer at African Food Changemakers here in our head office in Abuja, Nigeria. So let's have the introduction coming. I'm going to be going to the chat box to give those who have introduced themselves a shout out. I can see the first person here introducing himself is Mubarak Bala Abubakar. He's from Kebbi State. For those who don't know, Kebbi is in Nigeria. We have Nasir Idi Mohammed. So it would be good to also add what kind of business you do, what's your business name, what services you offer. So I can see Stanley Nwachukwu from the name I understand is Nigerian. We have Bogis Pearl from Liberia. Finally, Nigerian. It's good to always have a mixture of African diversity every time we have our sessions. So let's keep the introduction coming. Let's network. Let's meet with people, new people on the call. I can see Saadatu Adamu, she's into crop production and from Nigeria. Another person from Uganda here, Steven, who is from Now Organic Enterprise. I can see Salome Abraham. She said she's an outdoor. And then our very own ambassador, I said, now Uchi from Addis Agro. So let's keep the introduction, let's introduce ourselves, let's work. And so our quick poll for today is okay, for our poll for today, I'll be pushing a poll. You should be seeing it coming up on your screen right now. Just very easy 10 questions. You want to understand your understanding of what's your knowledge, your current knowledge as it pertains the topic we'll be discussing. What do you know about venture capital? Have you had any experience? Has there been any barriers for you to accessing capital funding for your business? And what is your program expectations? I can see we are 76 on the call. So I'd expect that we have at least half of us answer the poll. This would help us to better understand your current knowledge as it pertains the topic and help us to know how to better structure them in the future and even currently now. This would also give our trainer today an understanding of where you currently are as pertains the topic we will be discussing. I'm here to see anybody filling the poll. But while we are doing that, waiting for, I understand it's 10 questions. It might take a couple of seconds for you to answer everything. I'm going to the chat box to constantly give you the shout out to those who have joined us just a few seconds ago. I can see Alessa from Botswana is into fruit, vegetables, and food production. We have with us here another person who's also into vegetable and crop production, Walter Okelo, that's from Uganda. It's amazing to have you today with us. We have Afolashade Adetoro from Lagos, Nigeria, Ikoyi to be precise. It's amazing to have you on the call. Victor Balogun from Abuja. Oh, great. We have Nasir Idi from Borno State, Nigeria. Great to have you on the call. Tanzania here is Charles Adam. He said he's into crop production. So aside from introducing yourself, if you see someone here who is doing something similar to what you're doing, you can feel free to chat them straight from the Zoom call and begin your conversation from there. You can never know what can happen. Oh, for example, you see someone from Malawi. So, oh, you also do this. I'm into this. Or I'm also in Malawi. How can we connect? How can we see? What can we do together? I can see people also going extra miles to even drop their phone numbers and their emails. I am really impressed. This is something we really encourage. So you and drop your emails and have people connect with them. You can often go ahead to drop even your social media links for people to connect with you way beyond the training today's session. So I see a couple, I just have 10 persons who have filled this survey. So let's please take, okay, now it's 13, 14. Thank you so much to everyone that has filled the survey. Let's take it to 30 and then we will call the survey, would end it for today's session. Okay, I can see we have 21 persons that have filled the survey. Thank you so much. Let's have 8 more persons. So would round this up to a whole figure and would thank you so much. I'm seeing the number is increasing. It means we're getting responses. Thank you so much to everybody who is responding. You are the real MVPs. Great. So we have clocked at 30. I'll be ending the poll and sharing the results. So I can see Adiola Samuel asking, please, where is the survey? It's a poll from Zoom. You should be able to see it on your screen. So I don't really know what the issue is. Okay, so thank you so much to everyone that have filled the survey. So I would be sharing the results. From our first question here, we have, how familiar are you with the concept of venture capital? We have about 21%, that's 7% that answer say, oh, very familiar, that's great. And we have 16% that have said, somewhat familiar. And then we have not very familiar, and we have not familiar at all. So have your business ever sought or received venture capital funding? We have one person saying yes. And The rest saying, okay, one person said yes, successfully received funding. One said yes, but it was not successful. And then majority actually said no, but I plan to. This session is definitely suited for any those who have not applied and are intending to. So stay tight and stay to the end of today's training session. So what do you believe is the biggest factor VCs consider when investing in business? We can see responses, size of market, passion of the founder, use of technology, and others choose social media presence. In your opinion, what stage of business is most likely to attract VC funding? And we have most responses coming from early traction, that's growth stage, or matured or profitable stage. And some 6% actually said any stage as long as the pitch is strong. And do you believe African agribusinesses are attractive to venture capitals? 47% said yes, very attractive. 32% said somewhat attractive. So this is quite encouraging that we have over 50% believing that African agribusiness can attract VC funding. Six is, have you ever created or presented a pitch deck to investors? And we have yes multiple times, yes once, no, but I've worked on one. That's 21%, and 29% actually know that they haven't. Which of this best describes your current role? We're seeing that we have most persons we have on the call today, 82% are agripreneurs, founders, or CEOs. And then the next highest percentage, which is 15, are team members at an agribusiness startup. And eighth question was, do you track financial performance indicators? And 56% actually said yes consistently, and then 26% said occasionally. Quite interesting. And number 9 is, what is your biggest perceived barrier to raising venture capital? And majority said lack of access to the investors. Okay. And then finally, what do you hope to gain from this workshop? I can see this is a different response, and I thank you to the 34% that actually responded. So I would be ending sharing of the poll and be moving on to the next segment of today. I understand a couple of persons are very familiar of who we are and what we represent at African Food Chain Makers, but we have new persons joining us today. So African Food Chain Makers is a non-profit organization, and we're committed to helping African agripreneurs scale resilient and sustainable agribusinesses that will feed Africa and also the world at large. We do that through training, access to funding opportunities, trade linkages, visibility, exposure. And then one important thing is we help you foster a vibrant community of change makers. Some of our programs in which we do that, that's the training aspect, is we have the Building Resilience Against Climate and Environmental Shocks, that's BRAZE. It helps agripreneurs build resilience towards the adverse effects of climate change. And currently we're excited to share that the second badge of the third cohorts for this year is open for application. So if you have not applied for the BRACE program, you haven't have any training related to BRACE. BRACE is one program you should not miss as an African agripreneur. It helps you with a lot of knowledge, the tools and practices, equips you with practices that you need to help boost your agribusiness. And we have the Leading African Women in Food Fellowship Program that celebrates women in different aspects of food and agriculture, celebrates what they are doing, and also helps boost their visibility and put them out on a global stage. We have the Scaling Export Program that helps agripreneurs to transport nutritious food outside of their local community to another country. And then we also have our Changing Narrative Program, where we change global perceptions about African food. A lot of persons think African food is when they hear about Africa, they think hungry people, dying people, but Africa is rich. We have a lot of resources, especially food, and people are coming to take this food and exporting them, processing them, and bringing it back to us. So Changing Narrative opens your perspective to what is indigenously Africa and how Africa can position itself to change the story and the narrative that we are currently getting. Next up, I'll be calling on our membership team to take you on what our membership community entails, where to stand to benefit when you join the AFC family. And on that, I'll be calling Nusa Obano, the membership officer at AFC, to take us through the membership drive. Over to you, Nusa.
Thank you so much, Hannah. And once again, welcome to today's Agrifunding series workshop. Kindly confirm that you can hear me, those on the call. Okay. Before I start, I'll do my usual identification of our change makers in the house. So if you're an AFC change maker, I would like to see you on the call. Let's drop in the chat box that I am a change maker. And for those who are not yet members of our community, it's quite sad that you are missing a lot because our maker can testify to the great opportunities that AFC share with our community members. We like Anna already giving us a breakdown of what to do at Africa Food Chain Makers, but in addition to what she said, AFC is primarily divided into three sections. We have the membership drive, which is membership community, which is a core aspect of our existence. We also have the programs part where we implement programs such as the scaling network program as well. And we have the changing narrative aspect where we showcase our entrepreneurs and we spotlight them in different creative as well. Our business strictly to entrepreneurship of forcing a community of change makers across the African continent. And at present, we have over 7,000 entrepreneurs across 48 African countries. And this is a laudable effort from our chain makers, our referrals, and our ambassadors. So I'd like our members on the call to give a shout out to themselves. You guys have done wonderfully well in terms of referrals and in terms of promoting our global reach. And for non-members of the call, I'm already expecting that my colleague should have dropped the link on the chat box for you that are members of the community. Kindly follow the link and join our AFC community. At African Food Makers, we help agri-businesses to strengthen and scale the businesses guide them to enter African and global markets through our programs and initiatives. In addition to that is that we facilitate networking trade and also speaking engagement with our community members. We share resources with them, we share opportunities with them on a daily and on a weekly basis. So we, as a member of our community, you have access to our newsletter, you have access to our membership groups, including the Facebook, LinkedIn, WhatsApp, and Telegram group, where you can connect with other entrepreneurs as well. And you also have a designated membership dashboard where you get easy access to our opportunities, to our initiatives, to our programs, and also promote yourself in our membership dashboard. The membership dashboard is like a Facebook where you have connection to other entrepreneurs. You share your activities, share your initiative, and also connect with other entrepreneurs through the chats and also the marketplace. Marketplace is where you can promote your businesses, promote your products, promote your services. You can simply navigate to your membership dashboard and use the marketplace feature where you can spotlight your products, track your clients, and also share your initiative across the membership marketplace to attract more sales and boost your visibility of your market products. Then other activities that we do in the AFC Hub is to share access to opportunities for entrepreneurs and potential members as well. I've been talking about benefits. I would like to also speak more on how potential members can join the membership community, and that is through utilizing the following ways. The first is to know about AFC. So you cannot be a part of what you don't know. And the fastest way to know about our community is by following us on our social media or using the link www.afchub to know what we do, see our community, see our members, see our initiatives. Once you click on that link, you will be taken to a landing page where you can see our community members. You can also see our initiative and you see a drop down where you can click to join the AFC community or view the marketplace. The marketplace is visible to all. but it cannot only be accessible to members who already have their products on the marketplace. Mind you, you only upload your products on the marketplace through your dashboard. The the website you see is for viewing and reaching out to those who's put it already on the marketplace. But to utilize your product, you have to upload it through your dashboard. Aside from that, you can also join the membership community by clicking the link, and it will take you to a landing page where you'll be asked few questions about your business and your personal information. The reason why we ask this is to streamline the kind of opportunities we share with you, tailored to what you imputed in your information. So we advise that. Okay, I can see Owen's hand is up. Kindly let me finish and I'll get back to you on that as well. So the reason why we request for information to be accurate is that we're able to streamline the right information and the right opportunities to you once we review your information. And once you've done that, you click on the submit icon on the screen when you filled your information. And once you've done that, you receive a confirmation email that your registration has been submitted. You'll receive a confirmation email 48 hours latest when you sign up to be a member. The reason is that it takes the team about 24 to 48 hours to review your submissions and approve it. So when we verify that, you also get a confirmation email that you'll be fully onboarded to the community, and it will lead you to your dashboard. On your dashboard, you can access whatever opportunities we share, including our programs, our newsletter, and other membership groups as well. Having done that, we request that our membership is free, and we only request that you meet it with applicant. Second is that the business that you work for or that you own must be in existence for at least 6 months. And lastly is that you have a social media presence where other people can see your activities in the agri-food space. Having said that, I will encourage everyone on the call to who are yet to become members to click on the link to sign up. And for our existing members, continue utilizing your dashboard and also networking with other entrepreneurs to gain access to more opportunities and to more resources. At this point, I will open the floor to questions or hand over to Anna in that regard. So over to you, Anna. And you can drop your question on the chat box and we will engage you on the chat box.
Thank you so much, Nusa. If you're not part of the AFC community, ensure you click on the link, join our community, and enjoy the many benefits. Some of them have not been mentioned here, Nusa, but join our community, and I'm very certain you would not regret joining us. So we'll be moving on to the next segment of today, and this is the meat of today's session. So we have with us on the call today Mr. Deji Adebusoye, who is our facilitator for today's session. He's the partner at Sahel Capital, which is a leading food and agriculture focused private investment in sub-Saharan Africa. He has over 15 years of experience and has played pivotal roles in driving investments and providing portfolio oversight across various value chains since joining Sahel Capital in 2016. He leads the CEFA project that is investing in 13 countries in sub-Saharan Africa and has a diverse background, has worked with Sijeta Group, Projection AG, and Procter and Gamble. He is also a chartered alternative investment analyst, and a certified project management professional. He holds a BSc in chemical engineering, first class honors, by the way, from the prestigious Obafemi Awolowo University, and an MBA from INSEAD Business School. Recently, Deji launched his book, Scaling for Success, Empowering African SMEs, which provides valuable insights and strategies for small and medium-sized enterprises to achieve sustainable growth and successes. So with a round of applause, virtual claps, all the best emojis you can think of. Let us welcome Mr. Deji Adebusoye to the virtual podium. And please, team members, you can also drop the link to his book. Definitely, it is a must read for every African SMEs. It's always a pleasure to have you join us, Mr. Deji. We're excited to have you on today's session. Over to you, please.
Yes, thanks. I was hoping you would help me on mute, so thank you very much. Can you all hear me very clearly? And can you see me? I'm not sure because I'm actually recording from my phone, so
Yes,
I'm not sure if you can hear and see
yeah, we
me,
can
right?
see you clearly. Yes, clearly.
Okay. Uh, all right. It's always a pleasure to be here, to always speak to entrepreneurs. It's something that I'm very passionate about, something I'm quite I'll use the word optimistic about as well, just because of what I believe is the potential for entrepreneurs in Africa. I think we are the last we're the last on the front lines, and somehow we have to make things work, especially those in the food and agribusiness sector. So there is a lot that I believe we can do to add value to entrepreneurs, and I think everything I do on a daily basis, my work, my hobbies, my interest, all has to do one way or the other with SMEs in sub-Saharan Africa. It's an interesting topic that I'm going to be speaking about today, which is on attracting venture capital and what investors look for in African agripreneurs. Um, the way I want to go about this is first to start by looking at what you call why investors want to invest in your business, right? Um, and the reason why I want to start with that, why do investors want to invest in your business? It's because many people actually don't believe that. I was looking at the polls that were set up initially, and I realized that some people actually feel like entrepreneurs, investors are really not keen on investing in African SMEs, but the reverse is actually the case. Entrepreneurs in sub-Saharan Africa, investors want to invest in your business. It's as simple as that. Because for us investors, there's really no benefit for us to hold funds, and that's the truth. If we have the money and we don't give it out, there is zero benefit for us. There are only two ways by which investors are incentivized. The first is that we have capital disbursed, and the second is that we are generating returns. So to disburse capital, you have to move money out quickly. That is one of the ways in which we get incentivized. And the second way is when we turn around those monies that we've invested and we generate very good returns on the money. Those are the only two ways we get incentivized. And so there is really no reason why we are holding on to capital and we don't want to push out that capital to businesses that are in Africa and sub-Saharan Africa. Now, the question then is, what are investors looking for? Before we come to the point on what you can do to be more attractive to investors, you first have to know, what do investors want to see? It's like a guy who wants to date a lady, right? You have to first know what interests her before you approach and you talk to her. But if you are unclear, completely zero, have no clue about what is interesting to her, then what are you presenting at the end of the day? So it's very important that you know, as entrepreneurs, what are investors looking for. There are three key things that investors want at the end of the day when they are looking and scouting for SMEs that they want to invest in. The first thing, I've already touched on that, is they want what you call outsized returns on the capital they've invested. They are not, if well, depending on the kind of investor you're looking at, but more often than not, they are not a philanthropic organization. So if they are not running a charity organization, they want returns from the business that you are running. That has to be clear in your mind. So the question of they should just support us, they should help us grow, they should help us build, leave that to those who are running charity programs. Commercial minded investors, or even right more than ever, impact investors as well, they know that for your business to be sustainable, there has to be economic returns from that business. So your investors expect an outsized return from your business. The second thing they want, which is linked to the first, is they want an opportunity to exit your business. They don't want to be there forever. Right. So if somebody is investing in your business, equity for a venture capitalist, they're investing equity in your business. They want to be there for a few years and they want to exit. If there is no path for them to exit your business, it creates a challenge for them. So even you, as you look at your business, one of the questions you should be asking yourself is, where is the pathway for this investor. Think for the investors. Don't just present your business to them. Demonstrate to them that you are not just thinking for yourself, but you are thinking also on their behalf. How will they exit your business? Is there a market for them to sell that equity investment they are making in your business, or there is no market? So there has to be that clarity in terms of what exactly, how will they exit the business? Then the third thing is, can they repatriate the capital to wherever they are coming from? So especially if they are not local investors, can they move that capital out of Nigeria? Can they move that capital out of Cameroon? Can they move that money out of Kenya, out of Tanzania, wherever the investment is? If you look at the country you are located in and you realize that, look, to get money out is hard, trust me, your investors are also thinking about that. And I'm not saying that that's a problem you can fix, but at least demonstrate that you understand those issues, you understand those challenges, and you're willing to have conversations around how to manage those different issues. Now, what enables investors to achieve these things I've talked about that is interesting to them, the outsized returns, the opportunity for exits, the ability to repatriate capital? What are the things that enable them to achieve this? One is that they want to make sure that wherever they're investing, it's a rapidly growing market. It's not a matured market. It's not a declining market. It's a rapidly growing market. And the reason is that for you to generate outsized returns, there is benefits if whatever business they're investing is being enabled and supported by the tailwind of the macro. So whether it's the macro of the macro of the country, the geography where the business is located, or there are different dynamics that just makes it for a growing market. A growing area, for example, in the world today is the world of AI. So it's growing. There are other aspects in the different world. In Nigeria, for example, there are certain sectors like that experienced rapid growth at some point. Fintech was growing quite remarkably. Edutech is something that is coming up as well. Food and agriculture is far from reaching a matured market. There's significant room for growth. So I would say that for everybody in that sector, there is definitely an opportunity. You are in a market that is growing. Within that sector, there are different subsectors and there are different part of the value chains where you are playing in. And you want to be sure that the part of the value chain where you are playing, there is potential for growth or for expansion. So the reality is that a rapidly growing market is something that is exciting to them. And those of you that have spoken to investors, I'm sure you would have seen them talk a lot about this kind of things, ask you, grill you about the market, trying to understand what is driving the market. There needs to be those things, driving the market. Another thing they need to achieve their goal is there needs to be experienced management team that have excellent execution abilities, because in every market, no matter how it is, you see some markets that are slow growing, they're mature, they're declining, but you see some excellent, exceptional entrepreneurs go into that market and still be able to get a foothold in that market and create something dynamic out of it. And you see some other businesses in a rapidly growing environment, and you just can't make sense of what business they are doing is. So the reality is that having an experienced management team that can deliver and execute excellently well is extremely critical, and they want to see that from day one. That's another thing the investors believe will help them to achieve what they are looking for. The third thing is that if there is proper governance to mitigate risk, that helps them to also, it gives them confidence that they can achieve their results. So if you look at your business, is there any form of governance in your business? And I'm going to come to things you can do specifically, but whether you like it or not, and I'm sure many of you you might be surprised at what I'm going to say, but I'm being candid with you because I think so many people are blindsided by the effort and the energy they've put in their business, and they believe that they should be getting help, and it's true, you should be getting help. Maybe in another economy that is awash with funding and cash, you can easily access that capital. Unfortunately, you are not in that market, and therefore you should be aware of the reality that is happening in the market where you are operating. The reality is that you as an entrepreneur, you are a risk. African entrepreneurs are risky. And I'm sure many of you understand what I'm saying by that. And the reality, some of you will beat your chest and say that, look, I'm not the risky one. The question is, how would the investor know who is and who is not? So the reality is that there needs to be proper governance, and the governance is going to help them, for example, reduce their FX losses. It puts in place a process and a system to help them repatriate capital. Scaling any business that will scale cannot be dependent on what you do every day. It is built on systems and processes. That is what helps businesses scale. So they want to look at the processes and systems that you've built around your business. Can they really drive growth? The regulatory issues around your company, can they come and bite them in the foot tomorrow? If they invest today and because of some regulatory or compliance issues that you are not paying attention to, if it comes up and shuts down your business, they've lost their money. Or maybe you are not complying with your taxes and the tax man comes after you, and before you know it, millions of naira or millions of Kenyan shillings is gone. That wipes out equity or value for the investor. So those are risks that they want to make sure that there's proper governance system that is set up to protect them from. And of course, the market and the competition. They want to make sure that you are fully aware of the market you're operating in and the competition that is there, and you're not just shying away from it. And then, of course, they want to see performance. I saw somebody put in the earlier poll saying that one of the things that will help you to be successful in raising money is if you demonstrate early success, and that is extremely true. You have to demonstrate financial performance or non-financial, whatever the metrics that your business is tracking or measuring. There needs to be some measure of growth. And that can be demonstrated, like I said, through growth in key indicators like financial indicators, revenue, EBITDA, profitability, all those things, or non-financial, maybe the number of farmers that you're reaching, or the number of people that are signing up to the use of your tool, or the number of acres that you're covering, or the volume of produce that you're enabling. Something, there has to be something that is being measured. Now, I haven't said what the investors believe will help them to achieve their goal or their goals, as it were. The question now is, what can you, as an agripreneur, do to attract those funding, the funding to your business? The first thing, ensure that you're operating in a growth market. I mean, I can't overemphasize that. I've already talked about it, but make sure that whatever market you're operating in is growing. And you need to demonstrate an understanding of that market. You'll be surprised how many entrepreneurs you speak to, and they are very siloed in their perspective. You process rice into finished goods, and the only thing that processor understands when you speak to him is he understands how to process rice and sell. He doesn't understand the dynamics of rice markets, both in Nigeria, outside of Nigeria, how global prices influence the price of the landed price and also the ultimate selling price of rice in Nigeria. They have no clue of anything apart from that siloed operation that you're operating. So you need to demonstrate that you understand the markets that you are playing in, because then that gives them confidence that if something goes wrong today, you can quickly pivot your way, or you can see warning signs ahead because you understand the dynamics in the market. So you need to demonstrate a very solid understanding of the market that you play in. You need to demonstrate a very solid understanding of the geography where you operate as well. If you're selling in Nigeria, you're selling in Cameroon or Liberia, wherever you are, there has to be a clear understanding of that market and the dynamics of that market. The other thing now is you might be asking yourself that what if I'm already operating in a market that is small? The growth potential is not that massive. Does it mean that I can attract investors? The answer is that it doesn't mean you cannot attract investors. But the few things you need to do first is you need to demonstrate that there is a real need. Many entrepreneurs create, I'm sure you'll have heard of that, people creating solutions that is finding a problem, right? You want to make sure that you're not in that group, which is why your market is small in the first place. You want to demonstrate that there is a real need for the business that you're running. The second thing that you can do if your market is small is that in that market that you're running, after you've demonstrated there is a need, make sure that you are a leader in that space. So you're not just one of the small people in the small market. You want to be a leader in that market, or even if possible, you want to create a monopoly in that market. It's a small market, but you own that market. That gives a lot of confidence. And you have to think of, how can I make sure that I have that monopoly in that market? How can I create an offering to my customers or to the broad range of potential customers such that I hold the market. I am a category leader in that market. That becomes very important to them. Or what you can also do, find ways to branch out to adjacent markets. If you're operating in a particular area, is there another very closely linked area you can pivot into that all of a sudden expands the size of the market that you're operating in? Or maybe you can even integrate further along the value chain, right? So, for example, maybe all you do is you sell rice, you only sell rice. Maybe you then want to backwards integrate to say, how can I set up a manufacturing operation so that apart from just selling rice, I can begin to aggregate rice also, and maybe I can mill and produce rice. But as I'm producing the rice, I'm also producing other products like brands and all that can also expand the market or whatever market. How can you integrate further in that value chain, forwards or backwards, to increase the size of the market in which you played? Another thing you need to do, which is linked to the dynamics of the team, and please listen carefully to this, as an entrepreneur, don't be a superstar in your team. Rather, build a band of stars. I'll say that again. Don't attempt to be a superstar in your team. Rather, find a way to build a band of stars. And you see my use of the word superstar star. I would rather invest in a company that has 5 stars than invest in a company where it's only the MD that is a superstar. And I know a lot of entrepreneurs take you boast about those things that I know my people, they don't understand the business as much as me. They can never understand it as much as me. That is your Achilles heel. Unfortunately, nobody wants to back a single superstar. It doesn't work anywhere because you might fall sick tomorrow. Unfortunately, that's the reality. Something else might happen that you cannot run the business. Then what happens? Their money is gone with you. That's one of the reasons why I say many entrepreneurs are key man. They carry what you call a key man risk for investors. When they look at you, all they are seeing are red flags. Because as much as they want to back you, they look at your team and they realize nobody else understands this business. It's just you. And one of the reasons why that happens a lot is, as entrepreneurs, we're always covering our business. Because that employee might run away with your idea. That employee might run away with your customer. That employee might go and start his own business. And so what? I mean, everywhere, in every market, in every dynamics, people are going away from businesses and going to start on their own. It's not in starting the business. The success is in the execution of the strategy. So you shouldn't be afraid to say, because I want to bring in my team, I want them to be onboarded, fully understand what this business is about. And because of your fear, you are holding every card. You are holding all the aces to your chest. Of course, there are trade secrets that, for example, you can protect, but make sure that every member of your team, they are completely on point. Maybe not every member, but there's a good number of people in your team that are completely on point in regards to your business. People that are able to walk up to you in your team and challenge your ideas. People that are able to call you in the middle, on the afternoon or at night and say, excuse me, there's an idea that just came to my mind. Can we do these things differently this way? Can we change the strategy you shared? Can we work in a different approach? And you as an entrepreneur, you are confident and you are secured enough to take those feedback from your employees, to change your strategy because you listen to your employer and you realize that this might be a brilliant idea. Let's do this. And all of a sudden, that employee feels empowered that, oh, wow, I just shared an idea and my boss took it and we are running with it. What you just gave that employee is, you're telling the employee, I am giving you an ownership right to this business. Run it with me. And that person will rise up to that occasion to run it with you because you are making sense. Or they can see that partnership you are giving to them. So please, I'm going to repeat that. Build a band of stars and don't just be a superstar in your business. Have a team that can function without you. If you're not around, let your team be firing on all throttles, without you. Build a performance-driven culture in your team. It's not time to be looking for, who comes to snitch on the other people in your business, who comes around the corner to tell you that this is what they're saying, this is what they are doing. Sycophants, the yes men people. You don't need that at this stage of your business. You should be performance-driven, and you should have a way in which you're tracking and measuring performance. And people can just execute based on that. They can go out and they can execute, and they know that at the end of the day, it's not about how nice they sing in your ears or they rush to come and carry your bags when you come around in the office, or they want to help you wash your car, take your children to school. No, it's the result. At the start of the day, there are KPIs defined. Did you meet your KPIs? Did you meet the performance? Yes or no? These are simple conversations. How And how did you meet those performance measures that we've placed down for you? These are things that you need to make sure they are fully integrated in your team. The next thing is you need to institutionalize proper governance. I already talked about governance being, a major problem. Have a board for accountability, whether it's a board of advisors or a board of directors. Not more than, maybe at this stage of your business, maybe not more than 3 people. Somebody who clearly understands dynamics in the market where you're operating in. Maybe another person who understands finance and accounting, and another person who understands legal issues. Some of those skills might be combined in 1 or 2 people, but have people that you're accountable to. And it's not just a figurehead. I know a lot of people have boards that are just figureheads. There's a particular company I'm on the board of advisors for. And, I like the way the entrepreneur, first of all, make sure that there are proper meetings. But apart from that, sends checks, sometimes calls to ask, okay, I'm thinking of this strategy. Do you think it makes sense? And you help to think through that strategy with them. And you are able to say as a board, no, don't go in that direction. And they know that they're accountable to you. Unfortunately, that's also something that is missing. Most entrepreneurs will say, it's my business. I can run it how I want. That statement alone tells you then go and run it out how you want, but don't involve me. Don't ask for my capital in that business because you want to run it the way you want. These are little things that sometimes in your conversations with an investor, they might not ask you the direct questions, but they are picking up on all those flags. They are picking up all those vibes. They are in your meeting room. They're having a meeting with you. An employee comes in and you walk the employee out. They're already getting a feeling of, or you shout on somebody, or you scream, or there are people in part of the management team that you are only the one when they come to meeting. It's only you as the entrepreneur that is talking all the time. You are the only one talking. They just know that you're a superstar and you don't have a team around you. They wouldn't tell you these things, but they are picking up on all these feelers as they are talking with you. And that's what they are trained to do, to assess the biggest risk, which is key man, which is you. And I'm saying that in case you have not heard it before, the biggest risk in investing in any SME is the entrepreneur. And you have to protect and show the investor that you are aware of that risk and you've mitigated it in a very large way. So have a board for accountability and don't just let them rubber stamp everything. In fact, the way you know your body is working is they tell you no a number of times that no, that thing you want to do, no, don't go ahead with it. Then your body is working. Understand your business risk and talk about them and your mitigation strategy. The number of times that I've seen people present pitch decks to me, and when it's time to talk about the risk in the market that they're operating, they just say, I know there's no risk. It's all green, 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 green. There's no risk in this business. Everything is under control. In fact, competition on all measures, if you look at all the things, our 4 biggest competitors, they are providing 2 of those services. We are providing 4, and I always laugh when I see those things. You have to be transparent and let them see you as that's where the integrity, that's where the awesomeness comes from. You tell them that, look, these are the 5 critical risks in my business. Risk A is high because if it happens, it will destroy this business. But this is how we are mitigating it. These are the 2-3 things we are doing to make sure that we are not impacted. Risk B is medium. These are the things we've done to make sure that we are mitigating it. Risk C is medium. We have not started addressing this yet because we don't think that the likelihood of it happening is high, but we are paying attention to know when it will happen. Let them see that you understand the risk in your business because then that shows complete management. You are aware, you are paying attention to them. Some you can mitigate, others you cannot. And maybe in a different video, I'll be able to talk to you about how to mitigate different types of risk, but you have to pay attention to those risks and you need to understand that you understand the potential risk. And then be compliant with statutory obligations and other business obligations. Now, let's start. If you think about it from a P&L point of view, the very first people you owe money to in the business are your suppliers. As an investor, I'm trying to assess, do you pay your suppliers and your contractors in accordance with the aligned contracts? So if you have a contract that says you pay your suppliers after 10 days, do you pay them or you hold them into 1 month, 3 months, 4 months? Those are issues because that supplier tomorrow might decide not to supply you anymore. Are you paying your employee salaries in time? I've seen entrepreneurs that travel on vacation and they are owing 3 months' salaries. You need to pay your employees in time. Are you remitting their payee and their taxes? Are you paying their pensions and remitting them? These are different people that you need to pay as a company. And me as an investor that wants to give you money, I'm looking at those things. Are you paying your suppliers? Yes, he's check. Is he paying his employees' salaries and remitting their taxes and their pensions? He is, yes. If you have loans that you have, whether with family, friends, or anybody, are you paying them down in line with the amortization schedules that are in place? If you are not doing that, is there a clear reason why you are not? Have you had conversations? Have you renegotiated the contract and maybe changed the timelines of repayment? Have you done all that? That is another group of people you should be paying. The government, taxes, company income tax, withholding tax, VAT. Are you paying the government what is due to them? We are checking for that as well. Then all other obligations, to have to everybody, are you paying them? Now, if I look through all these lists, your suppliers, you're not paying them or you're not paying them in time. Your employees, you're not paying them. Loans, you're not paying. Government, you're not paying. Please be very sincere with me. As an investor, why do I think that you pay me? Do you see why all those things add up? I'm looking at all the people you have obligation towards. You're not paying them. Why will I think that I will be different? So that already is a red flag. Why you have to pay attention to compliance and statutory and business obligations. Make sure that you are doing good by all your stakeholders, all the parties that you work with. You are staying, you are doing good with them. And one of the final things I'm going to talk about, which was also something somebody also said, that is you also need to record early wins, quick wins in your business. At the end of the day, without performance, your business is just a hobby. That's the reality. If you are just doing it and the business is not growing, it is all a hobby. There needs to be quick wins. How can you generate quick wins in your business? Maybe, and I've given several examples before. You want to start a poultry business. Why don't you first start selling eggs so that cash flow is coming into the business? Then you can backwards integrate and start getting your own birds and the cages and all that. Can you start closer to where the money is so that you can turn around? Then the time to turn around is also quicker and faster. Because when you do that, number one, you reduce the time to turn around cash, and number two, you can generate and show early wins. And that can come in the form of the cash flow they are bringing into the business. It can also come in terms of some of the key indicators that is driving your business. Then you also need to understand your financials as an entrepreneur. Understand the basics. And you don't need to be a chartered accountant or you be a CFA holder. Just understand your financial statement, your P&L, your cash flow, your balance sheet. Understand what the numbers are, how they flow into each other. Be able to ask intelligent questions, to your investors. And when you're talking to investors, show them that you understand your financials. So at some point, have your CFO and your finance manager in the room with you so that they can understand that you have a team. But sometimes speak to those numbers also. When if you think about it, the language of investors is finance. When they see you speaking that language back to them, no matter, don't think about it in the sense that they will quickly pick that, I'm not as sophisticated in it. No, as long as you know those things and it's not just you're just trying to brag and do yourself into it, you know them and you speak them in your own layman language, but you can demonstrate to them that you understand the financials of your business, you understand how profit is generated, you understand what EBITDA means, you understand, how to build equity, the impact of inventory movement on your cash flow. You understand those basic things. It's something that I can't explain how it excites investors when they see that you understand the financials to some extent as an entrepreneur. So you want to demonstrate that. You also want to demonstrate that you understand all the factors that are driving success in your business, and you can track them, and you are improving on those different indicators, whether it's financial indicators or non-financial indicators. Finally, be very strategic with fundraising. Fundraising is usually a long haul. It's not a dash. As much as you think that it's hard, even investors also think that it's hard to find good companies to invest in. So you can see there's already a mismatch. Your ability to quickly differentiate yourself already sets you out amongst the many companies that are looking to raise financing. And of course, it's not also all the time that you're doing an excellent job. that companies will find, investors will find you. So you also sometimes need to demonstrate looking out for those investors, but don't just send and be speaking to every investor. You will get tired because eventually you'll be frustrated. I've spoken to 100 investors and none of them wants to invest in my business. By the time I ask you questions about those 100 investors, you realize that 90 out of the 100 you have spoken to, in the first place, they don't invest in agribusiness in Nigeria. So the question is, why were you talking to them in the first place? So out of those 100, you should have only been speaking to 10 out of them. So do your own research, know the interest of various investors. I've seen companies reach out to me from Brazil asking for us to come and invest in a financial business. And I'm like, first of all, if you took some time to look at our firm's website, you will realize that number one, we don't do finance, we only do food and ag. Number two, we don't invest in Brazil, we only invest in sub-Saharan Africa. So do your own work, do your research, and make sure that when you're reaching out to investors, you are reaching out to those investors that can actually provide value to your business. Thank you very much. I'll pause there in case there are questions from the team or from the listeners. Thank you very much.
Thank you so much. There's always something new to learn. I can see we have two hands up. Palesa, about okay, I can't pronounce the second name. Please unmute and ask your question.
Hi, I'm clear. My name is Paglista. I am all the way down in Botswana. I just wanted to ask briefly, you've been basically covering a lot on existing companies. When you are talking about what would I do to be attractive to investors? What if I need someone as to help me with starting off? Like I need seed funding. I need funding for working capital. What are some of the things that you change and that you've established? That means I don't have a financial degree. I can forecast sales. I can talk about the possible risk. So what approach would you propose I take as a person that needs funding to start?
Um, I
Yeah, I'm
don't know if
sorry.
it's
I'm sorry.
my
I did.
end. I can barely hear you, Palesa.
Yeah,
Like
same here as well.
there's a lot of echo. So maybe if you can just type it
Oh,
in
I
the
was
chat, your question in the chat box, because we can't hear you.
okay. You can't hear me now still?
Yes, it's much better. So maybe let's give it a go.
Okay, I was just saying I appreciate the information you've given us. It's more drawn towards people that have businesses that are established. If I'm looking for a venture capital that will assist me from the onset, what are some of the things out of the stuff that you've mentioned in terms of being financially viable, minimizing risk, being measurable? What can you add for somebody that's starting off?
Yeah, okay. I think I get that question. I think I focused a lot on businesses that are already established. That's true. And there's a reason why I did that because for the easiest way for you to raise financing even from venture capital is, especially when you're looking at institutional venture capital investors, um, is to demonstrate performance, right? There has to be something that is happening in your business. Otherwise, anybody can literally wake up, from their rooms and say, I have an idea. I need a venture capital fund to finance that idea. That used to happen many, many years ago, when there were just few people coming up with the ideas and in some markets that are also awash with financing. Unfortunately, that's not the case we have in Africa. So there needs to be some performance. Otherwise, the easiest way, if all you have is an idea and that idea requires some capital to even begin to scratch the surface of it, the best way is to raise that kind of money from family and friends. But if you want to get to institutional venture capital investors, there has to be something happening in your business. They need to look at your business and say, oh, wow, you have 22,000 people who have signed up to this business. You have 5,000 people who have signed up. You have 300 recurring users. You have 100 people that have paid. There has to be something. So they can't just be nothing. And people will want to invest in that business. They are investing in you, but they're also investing in if you remember what I said, in the market that you're operating in. You want to believe that you can achieve something. What I usually tell people is that if you want to build something, especially if what you're building is maybe tech related, why don't you look for the easiest way to start that business that will not cost you a lot? I used to use an example of an acquaintance, somebody we went to school together, who built a company that runs vending machines across a number of countries in Europe. And if you look at what he has built today, it's a very sophisticated, technology-driven kind of setup. If you look at what he has today, most of you will feel like, oh, wow, it must have cost him millions to build what he has today. But I recall when he started to do that vending machine thing, he didn't even have a vending machine. He put a cardboard that he puts an iPad on, and then puts like a fridge. And he was trying to demonstrate something works. People can place the order on the iPad, and there was somebody that will receive the order and give them the product from the fridge. That was his vending machine. You see what I mean? But that thing is now super sophisticated, because from there it was demonstrating that at least people were using the iPad to order, and there were some metrics he was able to track enough to get the first set of VC investors into the business. So you can't start on ground zero. I think that's the summary of what I'm trying to say. You have to have something that you can show to them that is working.
Thank you so much. Would have Udo Kama kindly unmute and ask your question.
Okay. Good evening, everyone. Hi, can you all hear me?
Yes, quite distant though, if you can be a bit louder.
Okay. How's it now? All
Much
good?
better.
Okay.
Yes.
Well, yes, so thank you to the AFC team, and then Mr. Deji as well. This has really been insightful. My question as a follow-up to the previous speaker is around, yes, so you've addressed why there's a need for people to actually have some good metrics that they can present or traction that they can present to the investors or institutional investors. My question now is around the team, and you had also buttressed that. I wanted to ask particularly around if growth has happened all around, and this has been done by just the founder or the owner of the business. Doesn't that in a way count for, let's say they don't have a solid team? Because again, to put together a team, you need obviously resources, and then in some cases you're trying to build this thing on a lean side. So you're trying to reduce expenses as much as possible, hiring people, but with your expertise, you've been able to at least have some level of growth and some traction. Wouldn't that count for at least being supported in that regard, without an actual team in that sense? You also mentioned the importance of governing board or governance generally, as one way that puts you ahead in terms of being considered for investment. In the case again where you don't have a solid board of advisory, but you're still able to at least with experience maintain some level of growth and have some level of performance going on. Isn't that something that could be considered?
Very good question. And I think that I would also say that I'm fully aware that sometimes it looks like it's difficult when you're speaking to a group of entrepreneurs, right, to address all the different specific situations of all the different entrepreneurs. So you're right. I think the situation you've presented is the situation of somebody who as a single founder is really has done remarkable work, in getting the company up to where it is, that now investors are even, interested in speaking to you. And then they now speak to you, they realize, oh, you don't have a team. Is that a showstopper? Or you don't have a board? Is that a problem? I would say, to your question, will your demonstration of competence in building and running that business count for something? The answer is a huge, big yes. It does count for something, because what you have done as a founder is to show that you have the capacity and capability, right, to build and grow the business. Um, and sometimes, we've already read the book, The Lean Startups. You also don't want to ramp up too much on cost. In fact, it's also a smart thing, like you suggested. If you don't need a resource, don't bring this resource on board. Otherwise, then you'll be putting somebody in a position where, if you can't afford to pay the person, you have to let the person go. It's even more difficult to do that. So, if by virtue of the kind of business you run, it's something that you can run independently on your own to a certain point, I think any investor looking at your business will see that element. What they will probably not be able to overlook is if your ability to onboard one or two people could have step changed your business in a remarkable way, but you've independently continued to run, but they look at it that you actually could have added one or two people, but you've been doing it alone on your own, that will raise a flag. So, for example, they look at your financial performance, they see that, okay, you're generating enough to maybe even onboard one person to work with you, maybe not even a full-time resource, maybe a part-time resource to work with you. Because, like I said, at the end of the day, if you speak to anybody who has scaled a business before, they will tell you very quickly that the biggest enabler of skill are good people. You as an entrepreneur, well, maybe the world of AI now, I'm sure you may not even realize that with AI agents now, you can do many things that, you need people to get done for you. You can get, a brand manager, you can get an assistant and different things through AI agents. But the reality is that for you to bring on board people they want to see if you can play with others. That's a good way to put it. Because when you are scaling a business, you're going to be rapidly adding people to your team. And I'm sure you've read about so many companies that as they started scaling, problems started arising, issues, dynamics, and the company falls apart just because the team could not hold it together. They want to see if you can play with people. And the funny thing is that the easiest way to prove it, that will not cost you a lot, is having a board of advisors. You can be a one-person team, but have two, three people that you meet with on a quarterly basis. Sometimes these people, if they are very close to you, you might not, you probably don't even need to pay them. Some of them will do it out of the goodness of their hearts. I've seen places where somebody pays his board advisors, I think stipends of like, I think 50,000 naira every month, every quarter. That's 200,000 naira in a year. And you have the board. So even if you are the solo entrepreneur, you can tell your investors, I have a board of advisor, these two, three people. You can show that you meet with them on a consistent basis because you have the minutes of the meeting that you have been having with them. You have, outcomes, actions, and what you were doing. So I might not have employees, but I'm answerable to people. My business also shows that I can scale it to where it is now. The next phase, I need people. That doesn't come to you for money. But I have these three people that I am accountable to, I speak to. So even if I see me as a one-man army, I am not alone. I have people I'm working this through it. So at the minimum, you should have that in place because that will cost you next to nothing to have it in place. I hope that answers your question.
Thank you so much. Let's have Shelly K. Kindly unmute and ask your question, please.
Thank you. My name is Shelly. I have a startup that I'm running, and in this startup, it's providing an end-to-end solution. The goal is to provide an end-to-end solution to rural farmers. So what it entails is the first bit is to provide access to inputs, and the long-term plan, which is currently a big issue that most local farmers in the region I'm in are facing, is the post-harvest loss. And that would require a lot of input in terms of the infrastructure if you are to solve that issue. But because my plan is to provide an end-to-end solution, straight from production to value addition, when I'm pitching to investors, do I show them that, yes, I've started something in the production side, and I also have traction there. But my long-term plan is to, which is the real intention why I did start this startup, is to provide post-harvest solution that is value addition. So when I'm pitching to investors, my question is for funding, do I just highlight the fact that I'm starting off with production and avoid mentioning the latter stages, because that would be capital intensive and might not have the finances to take it on, but I can start on the production side. However, it's not the main objective of the project. Don't know whether my question is clear.
It's very clear, and very good question again. And I think you answered the question yourself. You need to show them that. I think the question is in how you show it to them. And the way to think about how you're showing it to them is you're telling them that, investor, this is the business I do today. This is what we have achieved. This is what we intend to achieve over the next couple of years. But now this is the big picture. The big picture is that this is the bigger problem I'm trying to solve. This is how I intend to walk from where I am today to that big picture. But right now, this is the need. This is what I want to solve. And this is the opportunity that I want financing for. Now, when you do that, what you're doing to the investor, telling the investor is, I know what I need to do today. I'm already doing something. I'm getting traction. I know what I need to do, but I also know what I need in the future. I'm not allowing the future to distract today. But I'm aware of it. I'm keeping it in perspective. The reason why it's also important for you to do that, because as much as we investors, and I say we, I don't want to, I don't want to use other, just say all investors. We investors, as much as we can be a blessing, sometimes we also become like an impediment in the way of the entrepreneur. And the reason why I'm saying that is, if you have not shared that vision with them and you're telling them that this is what you want to do, and they come into your business and they invest. And after investing, you tell them that you want to get to that point, and they tell you that they don't want that idea. They don't believe in it. They don't think they want to finance it. Then you are stuck with an investor that is unhappy with you. You're stuck with an investor that probably will not sign up on what you want to do. It's better you tell them from day one what the plans are. If they want to come in, let them come in on the understanding that you most likely will get to that point at some time in the future. Not now, maybe not even in the next 2 to 3 years, but maybe year 5. These are the things that I'm going to be thinking about. That if you are clear that that is something you're going to do in the future. If you are still in doubt, you're not sure, it's something that, okay, maybe or maybe not, then there's no point talking about it, because it adds some certain colors to what you're talking about today. But I think it's important you let them know 80% of your conversation with them should be focused on the now. What are you building? What are you doing? What do you want to generate over the next 2 to 3 years? How will their money help you to get the business to that point? But the problem usually comes when you spend 20% talking of the business you are running now, and you spend 80% of the time telling them about that future business, which is not necessarily a bad thing. But like you said, it's capital intensive and all that. And their mind, they're saying that, look, what you really need money for is that future thing, not this one you are doing. And our money cannot go into that. So sorry, we can't invest in you. I hope that helps to answer your question.
Thank you so much. Next person is Ibrahim Taimiyu. Kindly unmute and ask your question, please. Thank you.
Okay. Thank you very much, my brother, Mr. Deji, for the facilitation. You really went down on the topic. My name is Ibrahim Tiami Ibrahim, and I work with SMEDA, Small and Medium Enterprises Development Agency of Nigeria. Okay, my own is a comments and question. You see, when we are talking about getting an investor to key into your business. Some of the things that Mr. D just mentioned is just within the ambient of a good business plan. Documentation is very key, because majority of, based on our experience, majority of our people, they don't have document, they don't do documentation. Business plan is one of the documents that's very, very important, because if somebody, that is when you are starting. If somebody, an investor, want to come to your business and you are seeing that you are doing fine, but you want to see whether you have a documentation, it's very key. All the things that Mr. just mentioned, the free entry through getting their returns back, then the exit strategy, how they can easily leave the business, at the same time the risk. All these things supposed to be in your business plan as you are starting, because it's very key. All right. Then when you are talking about the real time that you really need an investor into your business when you are scaling, and your growth plan has a lot of things to say about you, because these are some of the things that we need to look at as entrepreneur, as agripreneur. Agripreneurship, agribusiness value chain generally is not like other business. It's very sensitive, and it's time bound. Once you are doing agribusiness and you cannot meet the time, then it's not like vulcanizing. It's not like other vocational enterprises. This is a very sensitive area. That's agribusiness. So you need to have all those documents so that you can plan ahead the growth plan. Why do you want to scale? Why do you need an investor? Which area? What opportunity have you seen? These are very important. And all these things that they just mentioned will be included in those documents. Because if you are seeing that you are doing the business, that is why he's interested in investing in your. But if you don't have documentation, it's very, very bad. Okay. Then another thing is that technical knowledge is very key. For example, the last person that spoke, that asked question. As far as I'm concerned, as far as we are concerned, you are providing solution of post-harvest. Is it technology based? Is it a technology based solution? Because if it's not a technological based solution, you can't call it a startup. You're just starting a business. Because it's only when it's backed by technology, it's a technology driven, then you can call it a startup. See, some of the things that investors are looking at. They will look at it that the promoter technically is sound. And when you are meeting them, it's not necessarily that you, the promoter, should be the one that is answering some question. Just like Mr. Deji mentioned, in your business plan and your growth plan, your management team is key. The advisory board is very key. They are more technical and have some of these things, because once the investors notice that you are not composed with some of the technicalities, then they will run away. Because just like we have said from the beginning, the first thing, free entry, want to see the return on their investment. Thank you very much. This is what I just want to add to hit so that they can have a robust discussion. Thank you very much.
Thank you very much, for that contribution.
Sure. Thank you so much, Ibrahim, for your contribution. We have two more persons, and would call it a day. Chinomielum, please unmute and ask your question.
All right. Good evening, Mr. Deji. Thank you so much for the information which you've shared with us today. So, my question earlier was some of the critical information which you said we need to communicate to our investor. At what point do you have that communication? Should it be on your pitch deck, or should it be on the business plan? Because you need to keep your content of information as concise as possible for it to be easily consumed. So that's my reason why I'm asking, how do you show? Because some of the things you share is actually beyond the scope of my own pitch deck. So do I need to rework it to include those information, or what's the right way to go about it? Thank you.
Yeah, maybe just to be sure, give me examples of some of the information that you think you're referring to, so that I'm sure I'm answering that question properly. Hello? Okay. I will attempt to answer. I would have loved if you could have provided that additional context. Um, so the investors get information about your business through multiple ways. One, of course, is the pitch deck that you are going to be sharing with them. And as much as possible, um, when you're sharing your pitch deck with them, if I want to see a pitch, for example, what information would I like to see on a pitch deck? I want to see information that, oh, okay, I get it. No, no worries. I want to see information that demonstrates that there is a market for the business that you're doing, which speaks to the part where I said that you're in a growing market, a market that works or does not work. I want to see information that you're in a market that is growing. I want to see that pitch deck that you are based on that market, there's something interesting about what you're doing because you seem to be gaining traction. Um, and that will show certain indicators that you're actually gaining traction. I want to see that you have people that have capacity and capability to support that growth. I want to see that you have some accountability. That's from the board perspective. If you have some results already, apart from the performance, apart from just showing traction, if you have some results, I want to see those results as well. Um, if you can also tell me a little bit about the risk that you see and that you are working around, I want to see that as well. Yeah, I mean, if you show me that, I already know whether I am interested in pursuing that conversation further or not. Now, that's what you are sharing with me for the first time. But the reality is that the way I, as an investor, get information from you is actually multidimensional. One is the information that you share with me. Being on a phone call with you and listening and asking questions, meeting you face to face, coming to your company to meet with you, asking you to let's catch up for a coffee. All those things are me already gathering information. Whether you like it or not, I'm also probably calling two, three people that you didn't know that I'm going to call and probably will never find out that I called them. But either because they've worked in your company before and left, or they're a supplier to you, or they're a customer to you. And I'm calling and speaking to all these people, and they are giving me perspective about you. So sometimes you might feel like an investor walked away, despite the fact that your business looks good. The reality is that they probably spoke with somebody that left your company, and the person talked about you being a horrible leader, horrible MD. And then, of course, they don't take their word for it because they're also horrible employees. They call a second, a third, fourth person that also left your business. And out of all the four of them say you're a horrible person. You might not be aware of it, but all you just know is that the investor comes to you and says, sorry, we are not interested. But we speak to so many people about your business. We call people you'll never be aware of that we are calling. So for me, apart from the pitch deck you are giving to us, be intentional about running your business. Be very intentional. Know that anything and everything about your business is going to get to the ears of the investors one way or the other. So you're not just trying to, package, for lack of a better word, trash and put it to the investors in the form of a pitch deck. But every other thing, we all know that it is trash, right? You're all doing incredible work, but the focus is for you to be intentional about it and everything you're doing about the business. But like I said, from a pitch deck point of view, those are the things I want to see to be able to gauge if I want to have a second conversation with you or with your company.
Thank you so much for your response. We just keep getting more people. Oh, good. So let's have Irene Barnabas kindly unmute. After that, we'll have Tanko, and that would be the last question, please.
Oh, good afternoon, sir. Good afternoon, madam. Good afternoon, everyone. I believe you can hear me.
Yes.
Okay. Yes, sir, this is very interesting. I really appreciate your time coming to give us a clear understanding of what we need. My question is, like, let me cite an example. In my own case, I just registered my company with main focus on exportation and importation of agro products like beans, rice, cocoa beans and the rest, depending on how the demand may come. I don't have them ready in the stock, but my aim is to look for customers when I get a contract to supply to a particular destination. I get the products from the farmers, so yeah, I know that I will get the products at a very good rate. And in fact, there are some places that the farmers sell those products at giveaway price, but when you are going there to buy in large quantity and for the purpose of either exportation or supplying to a company that has been in manufacturing using the raw products to manufacture their finished goods, it will be on a higher price. So, like that kind of business, what are the right ways to go about?
I don't know if it's from my end. We can barely hear you. Your network is kind of bad.
Oh,
It's probably from your hand because I can hear him clearly.
okay.
Okay,
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 thank
then
you.
go ahead.
Yeah.
Okay, so I'm trying to round up by saying that, like that kind of business, what is the right way to go about looking for investors to invest in? Probably when you have an order to supply a particular product in a large quantity that requires a huge amount of capital. Thank you, sir.
Yeah, I mean, these are real needs, right? And I completely agree. If, for example, you are into commodity aggregation, you need financing to be able to aggregate. At some point, if you don't aggregate enough volume, certain minimum volume, it doesn't make sense, right? You don't make money off it. So you need to at least, maybe, for example, you need to aggregate a truckload for you to be able
Yes.
to supply. And if you don't get that initial volume, it becomes difficult and challenging, honestly, for you to make money from it. The easiest way to go about this, and I'm sure you will also say, DJ, I'm sure I've tried. If I had that opportunity, I wouldn't have come and asked you this question. But the easiest way to get the right kind of financing for this kind of opportunity is really, sorry, one second. Sure why something is showing on my screen. Okay. Is really from people that know you very well, friends and families. They are always the easiest to get that initial capital from. And I'll give an example of a particular portfolio we have. I won't mention the name that we've invested in today, doing incredible numbers today. But when he started the business, it was based on the credibility of his personal credibility. He borrowed from family, from friends. He thought he was exporting actually, and even made a lot of mistakes. He lost money, but he had certain level of credibility that made them give him some leeway in terms of being able to continue to attract the support of the people that gave him money. And today, he continued to do that, but it was not easy because he couldn't scale that business with that model of expensive short-term loans that he was getting from people. But eventually, we were able to invest a much larger capital, and he was able to significantly double, triple his revenue in a year, 2 years. So the reality is that you might want to get family, friends. You might also want to get short-term expensive loans. And I'm saying this very carefully because the reason why family and friends is the easiest is if you lose that money. Thank you very much. Sweden is saying that they are here to help finance those volumes. So Sweden is already saying that they are here to support you. So thank you very much for that, Miriam. So I'm putting that on the table for you that you can approach Sweden. I think that they are saying that they can provide that kind of capital to support that initial traction. But even for Sweden, what is important also is performance and traction always wins every day. If you have done one, and let me use an example. Somebody who wants to export and says that my only problem is money, has not, is because you have not exported before that you think that your only problem is money. Even when you have the money to aggregate, you realize that there are so many bottlenecks in the process of exporting, and you eventually burn your fingers and lose the money that you eventually raised. So if you can find a way to demonstrate and get the experience in that line of business in a cheap way, maybe from family, friends that will be patient with you, Then you now go to the likes of Smedan and say, look, I have traded 2, 3 trucks. This is a cash flow. Money has come back and I have repaid. Smedan, please give me some money, to expand that business. Even they will be more excited, to support you because you demonstrated performance. Performance is always very important, in a very small way. You might say that, look, the way I did it, I was only able to do 1 truck. And so what? It's a long-term journey. You know that at the end of the day, you're going to be doing hundreds of trucks. So if you believe in that long term, then do the 1 truck today, and then turn it around once, twice, demonstrate that you can turn around the money. And I'm sure that you'll be able to get people to support you. I think for the sake of people on the call, it would be helpful if Smidan can also drop their contact details for the entrepreneur so that they can reach out to you.
Exactly, sir. I already requested him to share his contact with me in the chat box.
Yeah.
And other people are also requesting, so it will be very helpful for us to get his contact.
Okay. Let's have Tanko Musa kindly unmute. Hello, Tanko. Kindly unmute and ask your question, please.
Okay, thank you very much. I was looking forward to you to enable me on mute. Can you hear me, please?
Yes.
Hello, can you hear me?
Yes, I can hear
Okay,
you.
great. So thank you very much, Mr. DG, for your insightful presentation and your responses to most of the questions that have been asked so far. Thank you so much. It was quite enlightening to me, and I appreciate. So I just have a question, right? So when you keep talking about traction, traction to me, my own understanding is it actually validates your product market fit, right? It means that your product is gaining some form of awareness and customers are trying to patronize you kind of. So over the years, right, I've had this encounter with a lot of investors. They are a bit shying away from early traction, right? They want to tell you that, okay, for your early adopters, right, most of them, they find a way of asking you questions in which they'll get to understand that, okay, these are mostly your first degree contacts, like you're saying, your family and friends and all of that, right? So there's that thin line between your early adopters, which are your first degree contacts, your family and friends precisely, and the real customers over there. So they will find a way of now telling you that, no, it seems actually you have attraction, but the real customers are not the ones patronizing you. So that gap between your real customers, those who want to really buy from you, right? Not just your family and friends and all of that. How are we going to close that gap? Because that gap is key in terms of making sure that you actually scale over time. So thank you very much. Looking forward to your response.
Yeah, thank you for that question. And first of all, I think you're right in the sense that family and friends are not customers. They are just trying to support your hustle. Right. So I, as an investor, if the people that are using your tool or your system, if you've gotten family and friends to use it and they become repeat users, at least you got family and friends. It's something. Some people cannot even get their family and friends to use what they built. So if you can get your family and friends to use it and they're using it consistently, I think I think for me, the demonstration of traction with family and friends is in continuous use, right? So continuous use, and for example, if it's a paying tool, you are seeing that people are paying for it, and you can see that they are using it consistently. Now, outside of that, the reality is that you want to get early adopters that are finding you or getting to use you from other channels, and they are staying and they are using. Now, this is the answer I'm giving now is more peculiar to people building tech-like solutions. If you're not building a tech-like solution, if you're a mainstream, business, then honestly, I want you to bootstrap as much as you can and get to some cash flow. I always use this example, and I think it's still important that I use it now. I went for a pitching event one day where a couple of companies came to pitch for investment from investors, and not just investors, also for whether equity or loans from. There were also a couple of banks that were present, and there was one particular company that stood out to everybody that was there. And right after that event, at least 3, 4, 5 people went for him and said, "Look, we want to invest in you." And I was told that he's already gotten the capital that he was looking for to do what he wanted to do. And what was this guy doing? He was selling vegetable oil in the markets, and he was doing a lot of business. I'll come to the numbers shortly. But interestingly was that he was not farming soya bean. Sorry, he was producing soya oil. He was not farming or harvesting soybeans from the farm. He wasn't processing, crushing, and extracting the soya oil. He didn't have any manufacturing plants to do that. No, all he was doing was he was going to somebody who was extracting the oil. He was buying in bulk. He took it to Kaduna. I think it was to Kaduna in the north, and he packaged them, and he marketed and distributed them. And at the time in which we were doing that pitching, he was doing over 800 million naira per annum in revenue. Now, the investment he was asking for was he wanted to backwards integrate and um, and and set up the extraction mill to be able to extract the oil himself so that it can add value. The reason I'm saying that is that it started close to, you might say that, okay, he's made 800 million. I'm sure it started when he was just buying into maybe 1, 2 drums of oil, takes it back, packages, distributes, sells at the margin, goes back, buys. And so he was starting and turning around money. And before he was doing a lot of money, and now he's come back to invest. So if it's not a tech-like business, find how you can start in the least capital-intensive way, that value chain, to get some money and continue to build and backwards integrate. At some point, investors will come your way. If it's a tech-like investment, then you definitely want to get people outside of your family and friends to use it, because like you said, it's product market fits. If you can't get people out of your family and friends to use it, then why should I believe that the market wants what you're selling? I think the questions we ask as investors sometimes, when entrepreneurs sit on our table and ask those questions, it begins to make sense to you as an entrepreneur why we're asking those questions. But because I also understand where you stand as entrepreneurs, passionate about your business, it's frustrating not to be able to get the kind of financing that you need. Then, from that perspective, it feels frustrating that why are they not funding that idea? But the reality is, if nobody apart from your mother, your brother, your sisters are using what you're selling, there's probably maybe there is really nothing there. But if there's something there, then show us that there are many other people that are going for it. And then, we begin to get a sense that, yes, there's something material or real here. I hope that at least provides some perspective. I'm sure it's not the kind of answer you wanted, but I think I just wanted to provide that perspective so that you understand the mindset behind why, just family and friends using your tool would not be sufficient.
Thank you so much, Mr. Deji. It's always an insightful session with you. I believe that based on the comments and the countless number of questions coming in, I believe that it has been an insightful session, and we keep getting more questions. Like, we can't respond to everything here. Please, let's give our appreciations, our thank yous, and everything in the comment section to Mr. Deji. And then he also has a YouTube channel where he shares a lot of nuggets and insights. You can follow him on his YouTube channel and watch all the videos, and also buy his book. The book is like picking his brain of all the things he has learned for the past how many years. So purchase his book, follow him on YouTube, YouTube is the free resources, but if you want to get the best of it, buy his book. And my team members will be dropping the link to the YouTube channel and the book so that you can purchase and also watch his many videos. I believe you would. I believe that you're going to get value for it. And before we let you go, we would love to take pictures with you. So let's have everybody on the chat turn on their cameras. Like those who are already familiar with our sessions, you know how we do it. So let's have you turn on your cameras, put on your best smiles, and let's take our, I like calling it family photo shoots. Let us take our photo shoots. Thank you so much, Abiodun, Ibrahim, Lukman, Timothy, Anne, Rolene, Joel, Stephen, Alexandra, Modupe, Shukurat. Thank you so much for turning your camera. Let's have more persons turn on their cameras. Okay, thank you, Mr. Stephen. I can see Iren Chimnum Yelum. I hope I pronounced that right. Thank you so much. Okay, so team members on the call, let's take the snapshot. So in 1, 2, 3, would give our best smile. 1, 2, 3. She's everybody. Like, I don't understand. My teeth is showing more than everybody here. So let's give our best smile. Okay, thank you so much, everybody, for joining. Thank you so much, Mr. Deji. It's always an insightful session with you. We look forward to having you come in more and more because there's always something to learn from you. So we'll be moving on to the
Thank you very much.
the next session. Thank you so much. We're moving on to the next session. Next session of today's engagement, and it majorly updates, but let me share my screen for just give me a couple of seconds to bring up my slide. Okay. So for those who have joined this edition and previous editions of the Agrifunding series would agree with me that it is always a practical session. It's something you can always immediately start applying in your business. For our next we'll be having build investor confidence, how to pitch your business for me. And this will be same venue. So would definitely push out the link, do well to apply, do well to encourage all your agripreneurs friends, even those that are not in the agribusiness can learn from these sessions. So do well to invite as many business owners, founders, CEOs that you know that within your network that need this session to come and learn with us in May. And then also you can do well to watch previous editions of the Agrifunding workshop series on our YouTube channel. Do not forget to subscribe on Facebook, Twitter, Instagram, TikTok. Like, think of any social media platform, we are there. Just search African Food Chain Makers and you'll definitely see us there. And you can also check out what we do on our website, www.aftihub.org, and also subscribe to our newsletters because that is where you get up-to-date information about what we are doing, every new event, every new activity, you will get it there. So thank you so much to every person that has joined us, have asked questions, introduced themselves. I see a lot of people were networking and hitting up connections and a lot of stuff. Thank you for your engagement. Thank you for your time. Thank you for your questions and everything. And a special shout out to those that joined us from the beginning and are still here. If you're part of them, thumbs up to you. So till we meet again next time, same place, same time, but another Zoom venue. Let's have an amazing rest of the week and have a great weekend also. Thank you so much, everyone. Bye.